In fact, we can kind of make a meme out of it, like kids do saving, adults do investing, and legends do trading. Hello everyone, Namaste, this is Shami Harens and welcome back to Yourwealth India. Today we are going to continue our discussion on the playlist of investment in stock market. And for those of you who are watching our channel for the first time, I think I would suggest you to go through our earlier videos in the same playlist. So let's start our today's topic, which is earning money in stock market, investment versus trading. But before we step into today's topic of earning aspect, there is one more interesting aspect about stock market that I would like to share with you. So did you know that in stock market not only can you earn money, but you can also save money as an investor. So how do you do that? Well, there are two different ways on how usually the investors do that. In the first method, when an investor holds an asset in the market and they feel that the price of the asset is going to go down, so they use methods like hedging and so on to reduce the loss that they might incur. For example, if as an investor I hold an asset worth 1000 rupees and I feel that this month, because of market conditions, the price of my asset is going to be around, let us say, 900 rupees, so I might lose 100 rupees in the process. So I would use some hedging strategies and take some actions so that my loss is minimized to, let us say, 60 or 70 rupees perhaps, thus saving money. In the second method, investors use financial instruments like future to reduce the cost that they might incur due to price fluctuations. I think many of us might have had this experience when we are trying to book flights online, and what we observe is when as the date of the flight comes near, the price of the flight also goes on increasing. So usually what do? We usually book flights well in advance, saving money. For example, if my flight is like next month and it costs about 3000 rupees, if I book it right now, and if I book after 3 weeks, perhaps the price might go to 5000. So by booking this flight in advance, I am saving almost 1000 to 1500 rupees. Similarly, investors use the futures market to save money on the cost they might incur due to price fluctuations in the future. However, these are pretty advanced topics and methods, and we will probably talk about them or discuss with them in our future videos. But the point here is that stock market is not only about earning money, but it is also about saving money. So now let's come back to our original topic, which is earning money in stock market, investment versus trading. So as the topic suggests, earning in a stock market can be done in two different ways. One is through investment and one is through trading. So how does a person decide which one they should choose, or probably if they should mix up both of them and have a combination of both? So in order to make the decisions and in order to have this clarity, one needs to understand what is the difference between investment and trading. So now we will try to understand the difference between these two from looking at them from different perspectives. Let us first try to look at these two from objective point of view. So investment is done with the aim of making your money earn more money. This is something we talked about in our first video of stock market investment playlist as well. It is like, telling your money, why are you sitting idle at home? Go out and get some work and earn some money. Now this might resonate with many of us who might have heard this before, because that's what most of the parents and the society asks us to do, right? Go out and earn money rather than sitting idle at home. And when it comes to trading, the objective is quite simple and straightforward. You want to earn money. It's not like investment when you have this excess money and you want to put it to good use. Here you're short of money and you want to earn more money, and that's when you do trading. And when you earn money through trading, you want to use that money as a secondary source of income. In fact, many people go one step ahead and they make trading as their primary source of income. And to be honest, I think it is kind of a dream job for all of us. If you do agree with me, please hit the like button of this video. In fact, we can kind of make a meme out of it, like kids do saving, adults do investing and legends do trading. But to be honest, I think investment can also be as powerful tool as trading, given its brahmastra of compounding effect. Now let's talk from a process perspective. In investment, a person tries to find an asset which they believe would grow and flourish in future, and thus they decide to invest in that particular asset. However, in trading, it's more of a game of speculation, where they try to speculate the price movement of a particular item and then they make a bet on it. Sometimes these bets are informed, sometimes they are partially informed, and sometimes they are completely uninformed bets as well. Yes, traders often do that as well. They just go on this full on gambling mode and they just make uninformed bets on the price movement of assets. So these are the primary differences between investment and trading. Other notable differences that we can talk about is probably the duration. Investment is usually done for longer period of time, probably in years. However, trading is done for much shorter period of time, sometimes even for seconds. The other difference is that trading can give you much higher rate of returns compared to investment. However, following the law of economics, they are quite risky too. So if you incur a loss in trading, it will be much higher than what you would do ideally in investing. In fact, sometimes the losses are so huge that it can even make you cry in your dreams. So I think this pretty much covers up today's topic. The reason why I made this video is because many people enter stock market and with what you call as beginner's luck earn some money. Now they are happy and committed until they go into the stage 2 when they start losing money. So now what they do is, since they are committed, they try to do some research, they do some analysis, they make some subscriptions, they join some WhatsApp or Telegram groups, and they come back again, and now they start earning again until they start losing again. It's kind of a cycle. You earn, you lose, you earn, you lose. But what happens is that you get confused now. Now you don't know what to do, because earlier the strategy that you came up with was working brilliantly. So now your focus is, how do I tweak this earlier strategy to bring back the good old days of earning more money? They are not even bothered about looking if they are making money or not. If they are making money, how much they are making money. If they are losing money, how much they are losing money. They have no idea about that. They lose their focus, and all their focus is to find the next multi-bagger. So this video is a reminder to all such kind of investors that you need to refocus on earning money rather than finding those magic trick that you can reap benefits for the rest of your life. That's not going to happen. If it happens, that's great for you, but focus should be on earning more money. So you need to refocus, and based on your situation, make a decision whether you want to do trading or whether you want to do investment, and if you want to do a mix of both, how do you want to go about it. So instead of getting lost in this maya of stock market, you need to focus on basics and fundamentals. So guys, I hope you liked this video. If you did, please hit the like button if you haven't done it earlier. And also, if you have a different thought process or different take on this, please put those thoughts on the comment box. And to keep watching our videos, please do subscribe to our channel. That's all for today. Until next time, tata, bye bye and namaste.